Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, October 14th, and it was Columbus Day, and the market was open, but the bond market was closed, which made it a little bit difficult to read the market. And SPY did open today with a gap up above previous all-time highs, and we made those previous all-time highs last Friday. So we opened the week with a gap up above those all-time highs, and we pushed up to the top of the implied move. And in last night's video, I mentioned that if we made it to the top of the implied move, I was going to sell bear call spreads on Tuesday's top of the implied move. And I did that. I did sell 585 and I bought 586. And we did close within the implied move on Tuesday's contract. So those spreads closed up 100% for me. And something else I've been noticing that I know a lot of times I mention the 35 EMA, that when it's underneath the implied move that we might have a down day or a flat day. But I've noticed that when this 35 EMA pulls up into the top half of the implied move, when it pulls through into the green, I've noticed that that seems to be an extreme overbought signal. So let's see tomorrow if that is true and if we actually get a down day, if this is overbought to the extreme. Because if you go back and you look at the past 2 weeks, this is the only time right here that the 35 EMA has pulled up into the green part of the implied move. And then SPX, we did also open with a gap up over here, and we did push up to the top of the implied move. I did the same thing over here. In last night's video, I did mention that if we made it to the top of the implied move, that I was going to sell 58.60, 58.70 bear call spreads, and I did do that today, and it was definitely a difficult trade. You could see at the very end of the day here we pulled above the implied move, but we did end up pulling back in that last 30-minute candle. So definitely a scary trade over here, but it did work out, and those did close up 100%. And here the 35 EMA you could see pulled into the green here, and let's see if that is a extreme overbought signal, because we don't see the 35 EMA pull into that green part of the trading range all that often. It's usually down here, and when it's underneath it does signal a lot of flat days, but when it turns into the green, let's see if that is an overbought signal. That could be a new and useful way to read the market. So SPY did close up 0.82%. SPX closed up 0.77%. VIX came down 3.72%. And we did not close within the implied move on the day, but we did close within the implied move on Tuesday's contract. And then taking it over to QQQ, we had a very interesting open here today, because last week we have seen this bear gap as a resistance, and today we ended up opening the week with a gap over that resistance. So easiest way to eliminate a resistance level is to just gap over it, and we gapped up. And we did make an island bottom gap right here. You could see this bear gap that was not closed out, and then this bull gap right here. So this is gonna be a battle zone at some point, and we gapped up, pushed up to the top of the implied move here and above it. Then we dropped back down, but we stayed above this gap. Then we came back up and we did get above the implied move, and we did stay within the implied move on Tuesday's contract. In last night's video, again, I did say that if we got to the top of the implied move here, that I would sell 499, 500 bear call spreads, and I did that, and they closed up 100%. I had a really great trading day today. All three of my positions closed up 100%, and they were all based on the next day's implied move. And here today you could see we started the day with the 35 EMA on the bottom half of the implied move, and it did push up into the green. Let's see if this is an extreme overbought signal. I'm actually excited to see if it is. If it is, I'm definitely going to be tracking it a lot more often. And you could see there's weakness in the relative strength and in Stupid Willie. So maybe that is just the signal that we need to pull back a little bit here. So QQQ up 0.84% today. VXN closed up 0.13%, so pretty flat, relatively unchanged. And we did not close within the implied move for the day, but we did close within the implied move on Tuesday's contract. And then IWM. IWM did continue that power move that we saw last week after CPI and PPI. We did open down, you could see that wick right there, and then from there we did pull back up with the rest of the market, and it was basically a straight shot up. We did get above the next resistance level right here, but we didn't quite take it to the top of the implied move. I did not take a trade over here today, and if you did, then 224, 225 would have been a spread that paid. And if you took any other trade, I know I talk about spreads a lot, but if you bought premium, if you bought calls, let me know if you did take a trade over here. The 35 EMA did not pull up into the green like it did in SPY and QQQ, but we did see a return to a bullish setup here with this 35 EMA crossing back above the 30-minute 200 moving average. So if we do pull back right now, as it is, this 30-minute 200 moving average should act as a support. IWM did close up 0.74%. RVX, the Russell Volatility Index, did close up 3.26%. So volatility increased in RVX. And we did close within the implied move here today. And lastly, DIA, we did open down over here and then we pulled back up. We stayed above the 35 EMA on the day and we pulled up into the green with the rest of the market. We got above all-time highs that we made last Friday at 429.07, and we pushed up into the green. And remember, the contracts here are weekly. We don't have daily contracts over here. So we are making our way up into the upper half of the trading range and inching towards the top of the implied move, which is 435. Here as well, we did not see the 35 EMA pull up into the green, which might signal that we're not quite overbought yet. But I'm going to be watching this carefully because I feel like I'm onto something here. And for now, it's nothing, but I will keep you guys updated on that. So DIA did close up 0.5%. And so far, we are still within the implied move for the week. All right, so that was a recap of today. Tomorrow, the bond market will be open again, so it'll be interesting to see if we get a correction due to that. And let's head over and check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, or if you just want to say hi, leave me a comment. And if my channel helped you land a winning trade, a quick way to say thanks is to tap that thank you button and treat me to a coffee to show your support. Alright, so starting in SPY, tomorrow's implied move is between 581 and 588, and that is from options. And the 30-day average volatility is $2 wider in each direction, 579 to 590. And on Wednesday's contract, the implied move is between 580 and 589. And this is not a difficult trading range. A few weeks ago, we had all kinds of moving averages going through the trading range and a ton of resistance. but we have made it back up to all-time highs, and we have the 35 EMA. Even though it's underneath the implied move, it's underneath us, and it is support. It is above the 30-minute 200 moving average, and then we have green over green, so we are very bullish. Even if we pull back, we're still very bullish here. And to the upside, we do have the all-time highs that we made today, 585.27. And if we do get above that, then the next target's going to be 588. And then on Wednesday's contract, the implied move is 589. So if tomorrow, if we do get up to the top of the implied move, then I'm going to be looking over to 589. We are definitely overbought here. And today we did get that extreme overbought signal when that 35 EMA came into the implied move, and now it is underneath us. And remember, when the 35 EMA is underneath us, or underneath the implied move, I should say, for the day, it typically means that we do pull back a little bit, or we stay flat waiting for that 35 EMA to catch up. So if we do see this new all-time high level as a resistance and we start pulling back, then the 35 EMA is underneath us. And then if we break that, 581 is the bottom of the implied move. And then we have this up gap from today that could offer some support if we do drop as well. Bottom of that gap is 579.50. 580 is the bottom of the implied move on Wednesday's contract. And then underneath all of that, we do have this support from just after PPI. We did see this as a resistance before CPI, heading into CPI, and then we pushed up and through it after bouncing on the 35 EMA. So 577.50-ish, around that level, is where we have support. So not a terribly difficult trading range in SPY. And in SPX, the implied move over here is between 58.25 and 58.90, and that is from options. 30-day average volatility takes that a little bit wider, 58.05 to 59.15, and on Wednesday's contract, 58.15 to 59.05. We have the exact same trading range over here, but with different numbers. Above us, we have all-time highs at 58.71.41. And if we get above that, then the next target is 58.90. That is the top of the implied move. And 59.05 is the top of the implied move on Wednesday's contract. So if we do find ourselves near the top of the implied move here, then I'm going to be looking to this strike. And lately what I've been doing is I've been taking one strike down, so that'd be 5900 and 5910, and that's going to be my bear call spread on the 0 DTE contract. So if we get up here, then I'm selling spreads up here. And if we see this all-time high level as resistance, then we do have the 35 EMA underneath us. That has been a support all last week and so far this week, and if that breaks, 58.25 is the bottom of the implied move. And then we have this up gap from today. The bottom of that gap is 58.15, and that also lines up with the bottom of the implied move on Wednesday's contract. And remember, when we fill a bull gap and the bottom of that gap tends to turn into a support level. So 58.15 could definitely be a support. And just like the upside, I'm looking at that 59.05. If we drop, I'm going to be looking at 58.15 if we make it down to the bottom of the implied move. And same thing over here, I'd be looking at 58.20 as the short strike and 58.10 as the long strike. And then underneath all of that, we do have that support. This is where we saw resistance heading into CPI. And then with PPI, we blasted through that, saw that as support. So we do have a pivot resistance turned support that is at 57.97. So let's call that 5800 is support. And then taking it over to QQQ, the implied move for tomorrow is between 494 and 501, and that is from options. And the 30-day average volatility is $3 wider in each direction, 491 to 504. And then the implied move on Wednesday's contract, 492 to 503. And to the upside, we did see resistance today at 498.80. So I'm going to call that 499. If we do get above that level tomorrow, then 501 is the next target. And then 503 is the implied move on Wednesday's contract. If we do take it up to the top of the implied move, then I'm going to be looking out to 503. And that is $2 out, so that is assuming that there's some good premium out there. But 503 I think I'd feel pretty safe at. And then to the downside, this is where we have the two overlapping gaps. That does tend to draw the price in, so I'm betting on a move down tomorrow. And the bottom of the bear gap is at 493, and then 493 is also the bottom of the bull gap as well. So 494 to bottom of the implied move, and if we do come down to that level, then of course I'll be looking out to 492, and if there's some decent premium out there, I would sell bull put spreads at 492 as the short strike and 491 as the long strike. And then the bottom of the trading range at 491 also looks like it has a bit of support right here, and underneath all of that, the 30-minute 200 moving average. So if you're looking for a place to bounce, 30-minute if we do drop hard. So that is the trading range for the next 2 days in QQQ and then IWM. The implied move over here is between 221 and 225, and that is from options. The 30-day average volatility is actually exactly the same. It pretty much overlaps. The implied move is actually just a little bit wider. So 221 to 225 is the 30-day average volatility. Wednesday's contract, 220 to 226. And pretty easy trading range here as well. We did close with that big push up today, and we don't really have a lot of resistance that we're looking at. The next level to look for is going to be the top of the implied move at 225. We did see resistance there over here, and from where we closed to that level, we don't really have any resistance, so we could float up to the upside. However, we do have the 35 EMA underneath the implied move to the downside, which often signals a return back to the 35 EMA. So that 35 EMA is cutting through the bottom of the implied move like that. And then if that does not hold, 221 is the bottom of the implied move, and that is on tomorrow's contract, and 220 on Wednesday's contract. And underneath all of that, the 30-minute 200 moving average is underneath us if we do fall. And something else I noticed, this is not in tomorrow's trading range, but we did have a downward facing 50-day moving average, and after PPI we had a big enough move to actually turn it. So that was definitely a bullish move. That move after PPI did turn the 50-day moving average so that the momentum is facing upward again. So easy trading range over here as well tomorrow. And lastly, DIA. The implied move tomorrow is between 425 and 436, and that is from options on Friday's contract. And remember that the top of the implied move for the week is 535, so we could see some resistance there if we do come up. And then we have all-time highs at 431.42, so if we do see resistance there, then the 35 EMA is underneath us. And if that breaks, then 425 is a real target. And this right here, we're definitely seeing overbought conditions. So even if we do pull back all the way down to 425, we're still well within the implied move for the week. I didn't put in this up gap right here, missing that one right there. So we do have support around 424.60. and then that 30-minute 200 moving average is down there near the bottom. So a few places that we could bounce if we do fall. And there you have it, guys. Everything you need to know in tomorrow's trading ranges to have an awesome day. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow.